What's going on, traders? Welcome back to another video. In this video, we're going to be talking about some of the main concerns glooming around the stock market right now and why you should not overlook them. Let's start off with the market in general. We rebounded today. We had a rebound after coming after a back-to-back consecutive bloody trading days. We finally saw the rebound, but there are still some worries. Let's talk about what the overall first global macroeconomic event going on right now, which is the pandemic, which seems to be far from over. These rising cases in India, don't overlook them. Some may argue that deaths, unfortunately, are what really matter, the real metric, but these cases are rising. 300K new cases, record-breaking cases in India. The vaccination also is rising, but with the overall concerns of how effective that vaccination can be, that's something to definitely keep in mind. Reopening stocks, American Airlines, United Airlines, Marriott, maybe even Boeing are some of the major ones taking blows after the U.S. Department put 80% of the world's nations on a do not travel list. Are these some stocks you should avoid or some you should take consideration in dip buying for a potential recovery in the future? Some earnings momentum seems to be fading, and now we have a bunch of misses with Netflix. We'll cover right now. And some of the money is leaving the market. Take a look at this. The team at Bank of America notes that cumulative equity flows last week totaled a net 5.2 billion worth of outflows, the largest 1 week move. Keep in mind, 1 week move out of the stock since November, and the fifth largest on record. Some of the quote-unquote smart money is exiting the market. And at the end of the day, the question still remains, has growth peaked? Do we have some room for upside? That is going to be a matter of time. As for some of the plays, one of the biggest ones on our watch list that will probably continue to be on there forever is Tesla. Texas, we're talking about the fatal accident that happened in Texas on Saturday, in which we did not have any guidance, any response from Elon or Tesla themselves, but they replied immediately on Monday after we posted that video. Elon Musk tweeted, "Data logs recovered so far show autopilot was not enabled and this car did not purchase full self-driving," in which it was a 2019 Model S. Moreover, standard autopilot would require lane lines to turn on, in which this street did not have. They were going 60 miles an hour in a cul-de-sac, very dangerous, and they happened to run into a tree. Again, rest in peace, very unfortunate. There was an error on my part in which I got filled in for 105 shares. I don't know how this happened. I tried to buy 10 shares on the dip yesterday. I guess it was a fat finger mistake, huge mistake on my part. I got filled in for 105. I did not want to size in that big yesterday, and I sold for a $200 loss, which it could have been worse, but a big mistake on my part. GameStop, AMC, baby. We've talked about these stocks. They have very, very low volume. We're waiting for the next biggest catalyst, in which I think for both of the stocks, it's going to be the annual shareholder meeting. June 9 for GameStop, May 4th, which is right around the corner for AMC. That first week of May is going to be packed with some very notable earnings, and such as the event and the annual shareholder meeting for AMC. So that week is going to be intense. Make sure if you're new, find any value in these videos, make sure you hit the subscribe button, baby. The next one on the list is Apple, in which we talked about on Monday. It might be the buy the rumor, sell the news, and it was. It hit a new low as they were announcing their new product lines, which range from a pretty intriguing new iMac, very slim, very fast with their new M1 processor, in which they also have new iPads with their M1 chip, an iconic purple iPhone 12, an AirTag, which seems to me like Apple is late to the party. Tile, there's a product called Tile, in which is already out in the market, in which you can track some products maybe on your bag so you don't lose it. You can track it with your iPhone. Apple TV 4K device. And one of the notable products and services I thought was interesting, because they're going to be able to compete with Spotify, is the Apple podcast subscriptions, in which is just another form of monetizing and bringing in some revenue for Apple. Viacom and Discovery, like I said, they're having a pretty decent day today. Both Viacom and Discovery are in the green, but like we had last time, I think there is way more room for downside with these more margin calls that are about to come. Take a look at this margin debt chart, which is yearly change in billions of dollars. 2020 and 2021, we saw that massive spike here on the chart, which just screams to me more margin calls down the road. If you want to cash in and profit on these dips, and you're asking yourself, how can I possibly cash in when the market pulls back? There's been a massive open interest on these June, July, $25, $30 strike calls for the VIX. A couple months out, but with the overall market teetering at these highs, as we talked about, there's a lot of concerns. These might and already are starting to print. Netflix, let's talk about Netflix really quick, which had a huge miss on the subscriptions. Q2 of 2019 was the last big miss, which was around the difference of 2.3 million subs versus today, 2 million subs. So they're right around the same ballpark. The stock went in 2019 from the 360s to the low 260s. by the next following quarter of that year. So with that being said, can Netflix be a buy opportunity in the near-term future? I do think yes. Take a look at this graph that came out from their earnings report yesterday. 2019 Q2, you can see here their forecast was around 5 million subs. Their actual was 2.7 million that year, quarter two of 2019. Today, this year, or this quarter, they missed by 2 million as well. Even their projected numbers for this quarter are really low. Take a look at what it says here. Q2 of 2021, we project paid net additions of 1 million versus 10 million in the prior year quarter. Obviously, this has to do with the overall pandemic and how people were staying at home and watching more Netflix. And you can't really blame it, man. They have competition. Disney Plus, HBO Max, Apple TV are really biting in at their market share, and they continue to state, we anticipate paid memberships growth will re-accelerate in the second half of 2021. Obviously, they have some bangers, some big hits like Sex Education, Other Witcher and Money Heist, in which I do not keep up with Netflix, but the last time I had Netflix, they had some pretty boring stuff on there. I didn't really find it interesting. YouTube all the way. YouTube's there, so it's a pass for me on Netflix. However, this stock is going to create a buy opportunity in which I'm very interested in the next couple weeks to months to come. So I'll be very patient on Netflix. That's pretty much it for this video, guys. If you guys found this video of any value, make sure you stop a like, comment below your plays, your thoughts, your next moves in the overall market. With that being said, I will see you guys tomorrow for another live stream. Take care, team.